All right. All right, let me take a look at something. Let's see here. First off, just test to make sure. Trying to make sure anybody on here can hear me. Leave a comment. Let me know that you can hear me, so that way I know that you can hear me. Because I know, like last time, nobody could hear me. Leave a comment. Let me know that you can hear me, please and thank you. Please and thank you. Okay, bet. All right. So look, check this out. So the flat, what's it? Cause I was just looking at it. Delete this. Cause I have marked this up. Like just randomly marked this up. Like this is still your USD, but I was looking at the candles and everything. When I got a flat bottom candle here, if I would have entered the first flat bottom candle and rolled it up to whatever, I could have rolled it for like 2 candles. I could have rolled it for 3 candles, whatever. Let's just put it here. Actually, no, let's put it here. So I enter, even if I don't know how to spot the trend or whatever the case may be. Okay, cool. But even if I don't know how to spot the trend or whatever the case may be, these Hakanashi candles are obviously made to let you know the momentum of the market or the momentum shift in the market. And so, like, I got from here, what is that? From here to there, that's 154 pips, right? From this candle that my cross is on, so I'm gonna put like a little line on it. So this candle right here, right? Obviously, sometimes you're not gonna get the perfect entry. Like, you're not gonna get the perfect entry. So obviously you might not know to buy right here. You might not know to buy on this candle either. But regardless, this isn't a flat bottom candle. This is a candle with the wick at the end of it. But you get this next candle that opens up. When this candle ends, you're like, okay, cool, bet. This candle opens, right? Time runs out because, of course, it tells you like how many hours is left in this candle on the day chart. So flat bottom candle, you would enter, and you would have been up if you held it 154 pips. And so it's that easy. And even like, and I'm doing this for your USD for sellers too, because I know I think that some sellers are getting ready to come in on your USD. I know I talked about on that I think Monday how this high was going to get taken out. So the high already got taken out. So that makes this your fifth wave. This candle opened up in momentum because, again, this was a flat bottom candle, and then so it also opened below this wick. So watch this. So if I just for whatever reason just say, you know what, I want to go ahead and just scalp this, right? So this candle, we know reversal candles, like, this is like a kind of like a doji candle kind of going on, like kind of one of those. Okay, we know that the market is going to get ready to reverse soon, right? And then you on the day chart looking on here, you're like, okay, bet. So this is a flat bottom candle, right? So you would have entered flat bottom candle, even though you at near the end of the trend, and what you could have did was, here's a high point. You know that the high point is going to get taken out because also because liquidity is there too, but because the market is always taking out high points and low points. Now, like I said, like you enter this flat bottom candle here, you would have rolled that up. You could have rolled it for 2 candles, and you would have been up. This is like at least 200 pips at least. All right, 187. So you're getting like 187 pips off of just 2 candles. But in my opinion, all you need is really like 50 pips a day, sometimes 30 pips a day, depending on your account size, and that can help anybody out. But yeah, this is just going to show you like these candle movements really kind of identifying what candles open up and things like that. Now, whenever I get on this day chart a top candle, I'm going to enter for the sell. So what happens when I get a flat bottom candle is, well, I'm gonna use this line for an example, and then I'm gonna, let's just say, I'll use this. Make that green. So right here was my first, over here in this area was my first flat top seller's candle. So I would have entered for the sell right there. My stop could have been, something, maybe above that candle right there. So I would have like a 50 pip stop, something like that. And I would have rolled it down to this target point. So I'm only in for what, a day, 2 days or so. And I'll get us 175 pips off of that. Getting on this candle right here where my cross was at, maybe you could get out. You could have got out on this second candle. So you really would be in for like almost 2 days to collect 175 pips off of that one trade. And if you like me and you have like a funded account or something like that, I mean, that's zero drawdown, which is good because you really want to take trades that have zero drawdown, especially if you're funded, because a lot of these prop firms, they want you to be disciplined and they don't want you to like over leverage like that. They want you to make sure that you are sticking to your, your trading plans and things like that. They want to make sure that you're actually you sticking to what you are supposed to be sticking to. So like if you're, if if it says, hey, don't go over, a $900 loss, right? Or you're in the red for like $900+. I mean, that's a lot of drawdown depending on how much you risk. So you always want to make sure that if you do have a funded account or something like that, that you are understanding that this if you trade like this, you still could trade with the trend, right? Because I'm still technically within this fourth wave, but at the same time, I'm using these identifications to kind of get me in a better place, and still at the same time, like I said, this is zero drawdown, so I don't have to worry about too much. Off of this, I could have actually I could have entered 2 or 3 times, and I would have been good to go. I could have doubled my account, tripled my account, and that's really for me. That's what I think the key is and the trick is, because some people don't know how to really trade to where like it's like, okay, zero drawdown. For me, I seen that's like the best way for me, especially like I said, when you look over here. I mean, 100 and something pips here, 100 and something pips here. I mean, and even if you wanted to move your stop loss and the profit, you could do that, and you could just ride this whole thing all the way down, and that whole thing all the way down. You just collecting everything, all that equity on the way down, you're just collecting it, which is good because that's what you want. But if you want to stay in for a candle or two, and you just want to collect the bare minimum and still get something decent out of it, you could always stay in for a candle or two and be all right. Now, I'm gonna take a look at the DXY, because if we go over the DXY, the dollar index. This is just my opinion. Like, I'm not even gonna lie to y'all. Like, this is my opinion. I'm gonna delete this fib. All right, so it looks like we're in a correction on the DXY, which means that we could potentially see the dollar moving lower. And I think that's really, whenever you piece everything together, you got a lot of stuff happening, with the dollar, in the news, and then you have the DXY, which potentially really shows you what the dollar is actually doing. So if I go on here and I actually look at this and I say, okay, cool, this is my A wave, this is my B wave, and then this is my C wave. So I got my C wave going down, obviously, right? So I think that this is a good indication that the dollar's going to potentially continue to keep moving lower, right? Now, if I grab this fib, let's take this up and let's move this back down. One thing that I went over, let me actually pull this down lower. All right, cool. So I know one thing that I didn't mention, or that I actually mentioned, but in the last few live streams, is that if you use this box, your retracement box is right here, per se, right? And if this was a retracement, it would come into here, right? It would have, bought down in here, right? And then maybe or sold down in here, excuse me, and then bought back up or something like that. But in cases like this, right? Let me delete this yellow box, and then let's see if let me get this again. All right, so for this, I'm gonna measure this out like as if I'm going down. So I'm gonna go down and I'm gonna go back up right here, and this is what you want to do to get where C will potentially go to. So obviously you want C to take out the low. So oops, let me right, so that's the bottom. Top right. Okay, cool. That's perfect. All right, so if you want C to take out the low, of course, because that's what C always does in the correction, right? So you want it to take out the low. So this 100% is like a give and take profit. If you're in a sell or something like that right here in this area. But another area that the market will come to is a 1.618. 9 times out of 10, it'll drop down to the 1.618. But if we look to the left, I mean, you can literally see that this market bought up. So this is what I'm thinking on this DXY. I'm thinking, all right, so we got this drop here, maybe a continuation going down to here, or potentially even somewhere in here because of the news that we've got going on. Oops. So turn this way. All right, so and the only reason I say like for it to go like that far is, well, I mean, all of this buyer's momentum, going on. Let me mark that too. All right, so so this is what it looks like on the DXY. This is what it looks like on the DXY. Anybody that does not know what the DXY is, it literally says it's the dollar index. So the US dollar index, I have to be specific, it's the US dollar index. So this pretty much projects the US dollar's movement. Now, the good thing about this is if you use this to the best of your ability, you're like, okay, cool. This is in a correction. This hasn't even taken out this low point yet. So we know for a fact this DXY is going to continue to drop, or in other words, the US dollar. So if we go back, since we know the US dollar is going to continue to drop, right? That just means that the dollar is weakening. And if the dollar is weakening, then we're going to look for buys on some of the pairs, at least that I look at, like Euro USD, Euro USD, Euro USD, and some of the other currency pairs, like with USD in them, I'm going to still be looking for buyers until a certain point. So my projection for this, maybe it could buy continue up to here, 1.618 to go to here, or Euro USD. That is with me just using this. Like the. Actually, I'll put this over here. Actually, I'm gonna actually redo this. Let's pull this up here. Now, so around this in this area, I'm thinking that Euro USD is going to continue to buy up. So this is not ready to sell off yet. But we do have a confirmation that buyers are still evident. And then one confirmation that buyers are still evident is right here, that we have this flat bottom candle, which is good for us, because if we get a flat bottom candle, that means that, like I said, buyers are still there. And then that on the fib, if you've been kind of paying attention to how I show people on how to use this. Like this 1.618 is gonna be your go-to price. It's not just gonna be this 100% level right here. It's gonna be this 1.618 as well, especially given again what the DXY has to do, or what the dollar has to do, in kind of correlation with this, and GBPUSD and AUDUSD and all that. Now things like USDJPY, right? Then we could see some more sellers coming in, right? Because if the dollar is weakening, that makes if the dollar is weakening, then that means that we will have more leeway. Let me go to let's go to the 5-minute chart. Let me go back to that one there real quick. And then so everything that was happening on like the Euro USD, GBPUSD, all that, it's all happening on here too. And so, like I said, like we're gonna see more sellers coming on here as the DXY is gonna sell off too. Only because, of course, like I said, the dollar's weakening. Euro USD, we're going to continue to see some more buyers on there. And then this is just like me preparing for next week too, because I know that we're going to see a lot of movement next week for sure. I'm kind of correlating everything all together because I know, kind of what one thing does, the opposite might happen on the other one, and things like that. So we go to like what was it? Let's go like USDCAD. USDCAD sellers, right? USDCAD sellers, right? We like the way I had marked this up, because I had already marked this up prior in one of my other live streams. Like I had marked this up, and you could literally see, like, you would think this would have a continuation to buy up, right? So I'm thinking, okay, cool. This is gonna buy up here somewhere in here, because obviously you gotta take out this high, and then it'll probably finally sell off. And the thing is, what other people don't know is, like, of course, like I said, sellers are gonna come in for a fact, because of the fact that that dollar just is not doing too hot. It's not doing too good. So, and here, delete this. I just want y'all to see this real quick. So let's just say right here in this area, it's kind of the same concept. You see, like, okay, this candle is coming, and you see it drop, and it comes back up, or whatever it's doing. But the second candle that comes open is a flat top. So you're like, okay, I could sell there. Could have actually rolled. You could have rolled all that down, and all of that is essentially what will give you more of a confirmation as to, like, when to get in, right? If you don't know when, you can use that. Let me go to let's go here. Let's go short position. So from here, we can use this candle at the top, or we can use this, like, where this candle wick, the top of this wick kind of stopped at. We could use that as like a little stop. So about a 39 pip stop, and then as the market keeps moving down, you keep moving your stop in the profit, and you're collecting more equity and everything like that, which is essentially what you want. And then look, you keep going all the way down here, 415 pips. And that's just if you kept moving your stop in the profit, moving your stop in the profit. That's all going to help you to grow your account. And let me delete this. On this side, on this side, let's see here. I use something called Next Funded. That's the prop firm that I use. This is the prop firm that I use. If anybody was wondering, the cheapest the cheapest one. Well, this is the cheapest one that I know that I've come across, and it's very efficient and very reliable too. Quick payouts, quick payouts. Like for 15K challenges, like $100, right? So this is really cheap. And then when you decide that you get want to get funded or whatever like that, I'm telling y'all, like anything that you do with the Fibonacci, anything that you do with the Elliott wave, anything that you do with anything, like all of like how I look at the market and everything, the flat bottom candles, flat top candles, whatever, like all that stuff will really help you to pass a prop firm challenge in like a day, maybe 2 days, right? Or you could do what I did. Like I said, I ended up getting I had colors, and one of the challenges that I took, I passed my prop firm challenge in a day when I used colors. Let's delete this. Let's delete that too. Alright, so like something like this, let me pull this down. So something like this, technically the normal person would I guess a normal person would assume this was a correction. But right here, technically it's not. And when you look over to the left, there's like no highs that have been, like, this high has not been taken out. So it's like, and then somebody might have thought that this might have been a correction or something like that, but that's not even close. Let's see. What's I doing? Okay, so yeah, that's just like a rule now. Like I'll use flat bottom candles from now on. I have to emphasize using that because it really works now. That I'm looking at, especially if you do it from the day chart, because you're able to like collect. You're not like looking at like, because yes, it's good to look at smaller time frames. Like if you want to just like get like something quick in, but like the bigger time frames, 4-hour day chart, 1 week, all that is really good, because it's like in one candle, that's a lot of movement. So you can really like collect a lot like off of just like one thing. Like I see a flat top candle right here. Go to so I see a flat top candle right here, and I could have just rolled all of that if I wanted to. I could roll half of it, I could roll all of it. I mean, 250 pips, that's solid, so I could have did that. And I would have put my stop at the top of this candle right here. So this candle right here. So that's a 37 pip stop for about 251 pips, which I think is great. Or you could have, kept riding that whole thing down. Now here, one thing about wicks is wicks help you to determine a reversal in the market. So right here, you might have been able to get a re-entry, right? You could have collected some more going down as you were still holding this one. So you're still in this first trade, let's say you caught 354 pips. You're still in that one. And then you get a re-entry at the top of this candle. And essentially that is like, let's see, that's 194 pips. So you got 194 pips on one, 354 pips on the other one. Actually, if you enter, there it goes. All right, that's better. So you have something like this, something like that, right? Where and delete this. Where here was your, obviously top of this was your actual entry point. You still in this to the end, and then here's your re-entry point, and you write it down, and then you kind of collect more equity, which is good. Now, if I had like, let's switch this back to regular candles. If I switch this back to regular candles, there's sometimes they're like with regular candles, it just looks really choppy. It looks really confusing. Like it's hard to kind of tell like, is the market going to reverse or is the market going to have a continuation? Like what is the market actually doing? So you see like here, you got like a buyer's candle right here. And, it might have, with Hakanashi, might be a seller's candle. Flat top at that, which means continuation. See, like we don't have any buyer's candles when we switch to Hakanashi. You could have used this candle. Even if you just roll one candle, that's like more than enough right there. So this, and then another thing I have to emphasize too is a real correction versus I'm assuming this is a correction, because a real correction will come into a orange or red box. So let's test this out. Let's go to Euro USD, because I know I tested it out on Euro USD. I'm gonna go put this off here. This off. We don't need that. All right, so I don't think we need that either. Actually, yeah, we don't need that. All right, so 5-minute chart. Let's pull this up. And I think I do remember the area too that was a fake out, like the actual precise area. Okay, it was literally right here. You see how this goes down, it goes back up. So if you start your trend here, right? If you start your trend here, and this is just to show you that this was a fake out, and that you should have looked to really just like continue to hold the buy or get for another buy, whatever you're gonna do. This is how somebody would mark it up, because literally like there's a high point, there's a pullback. 3 is the most impulsive, so I would assume that you put it here, right? Got a pullback and you get another high that's being taken out. That's 5, right? So now you're like, okay, this is a pretty impulsive move going down. So you're thinking, okay, this is A. Now I'm gonna show you how this is either, this is actually a continuation versus a how should I say this? Like a pretty much. I'll just show you guys how it is going to continue. How about that? So let's go up. Let's drag this down. Right. So let's go. Actually, let's measure this out. All right, so I'm like thinking, okay, this is your A wave, right? Now I'm gonna pull it. I'm actually gonna take this and I'm gonna put it here, so that way y'all can see. I'm gonna put this down just a little more. All right, there it goes. So essentially what happens is you have, again, your zone, which is here, right? And then what I do, I put a line here at the top and I put another one at the bottom. The trick to this is the retracement. If you are looking for a correction to happen, you want A and you want B and then you want C to just go like, okay, it's going to take out this low point here and it's going to go down. That's what you want out of the correction, right? But here's how you know if this is a real correction or if it's just a fake, just a fake out kind of thing. So it goes down. You're like, okay, this is A. Get your fib. You know, you're dragging it. You're dragging this up as if you're measuring out B to the top of here, and then you're gonna put it back down like, you know, kind of like I normally would do. And it's crazy because what happens is this box should get the market to, you know, market should come into this box and then sell off. Right here was a fake out, right? Market did come into this box and then it literally hit precisely the middle of this box. I'm gonna make this like blue. All right, let's make that blue. Precisely hit the middle of this box, right? Because you see it sold off, it bought back up, tapped that, and then tried to sell off. Now, you see that like price did not come into this red box whenever it tried to sell off. That was a fake out. It went back up into this box, bought up, sold off, bought up some more, tried to sell off again. At this point, it's broken. What is this? 9154. This top price. So because it broke that, I'm like, oh yeah, this is not a correction. This is gonna have a continuation going up. So I said, okay, bet. If I'm in the sell, that means I'm getting out of the sell, and I'm either gonna get in for the buy, or I'm gonna patiently wait to see what the market does. Maybe if it comes close to this high point or this high point, or whatever the case may be. But 9 times out of 10, if you get any form of like the market going and breaking this retracement box, right? And like obviously it broke it here, but it didn't come into this box here. I'm gonna highlight that too. So I'll probably make that a different color. All right, I'll just do it like that. I like black anyway. All right, so market did not come into this black box, which means this is not a real correction. It was a fake out. So because now I know that this was a fake out, it went back into here, and I'm like, market must want to buy up some more, because I'm patiently waiting. I'm not getting in nothing. If I was in the sell, if I'm in profit or something like that, I would have collected my profit. I would have gotten out the trade if I was like, you know, down like a couple of dollars, whatever the case may be. And I'm gonna wait to see what the market's doing. And exactly what I said, look what happened. All it is. And it's no coincidence, because if this is a retracement box, this is a retracement box for a reason. Like, this is made for the market to come back into, right? For you to get a better entry for the sell, and then to ride the sell down, because you know the market is going to have sellers take out this low point right here. So now that the market just decide, hey, I want to buy up some more, I'm gonna go ahead and modify my wave count. Now this becomes 4, and then maybe, you know, this over here might be 5. So this is another high point. So this is just scenarios that people actually be thinking that it is, but it's really just playing. It's really the market playing with your emotions in a sense, even though you really shouldn't have emotions tied to the market anyways. Some people that are new to trading, they are like, "Yo, what happened?" Right? So again, the same thing I did over here, right? I'm gonna do over here. So let's delete. Let's go here. So my fifth wave ended right here at this high point, right? So what I'm gonna do is, again, here's a drop. Pull this over. All right, cool, that's good. So here's a drop. Assuming again, me assuming this is A, right? And you get, B. Your retracement box should do your not your retracement box, excuse me, but your the market should not do what? I change this color. There it goes. The market should not do what? The market shouldn't break above this box. Because if it breaks above this box, that means you're gonna get a continuation. So it broke above this box and it continued. Because this is a what? A retracement box. So you wait for the market to. Actually, let me draw this over here. All right. So you wait for the market. The market sold off. You wait for the market to buy up into here to then sell off. It didn't buy up into the box and then sell off of it. It bought up here somewhere and then it decided to sell off. That's another form of a fake out. Like that's like, yo, like, nah, like you're not gonna get me. So then market buys up again, and again, like I said, I would have the price points already plotted down. So I would have this. Make that black. I'm gonna make this one black too. So, excuse me. So I'll have these price points plotted down, right? And I'm like, okay, cool. Well, if it breaks one of these prices to where it's like an actual, like a lot of noise, like a lot of momentum coming out of that. Like, I got this coming up above this, and then I see it kind of just wick this gray box and then try to sell back down. And then it's a bunch of times it just kind of wicked in this red box. But none of the times that I get several candles coming into this red box to let me know this market is going to take out the low point. In a way, here is this whole thing really, like this whole area right here. I'll make this. I'm going to make that. Let's make that like gray. So this whole area is like a range, right? It's not really going up. It's not really going down. It's just kind of moving sideways for a second until it decides what it wants to do. Now you can keep in mind those price points that I have plotted down. Like if this was you marking this up, at the time, and what happens is, like I said, again, it broke this price point. It's 92. It was a 9292, and it broke that, and then you just get some crazy up movement, right? And then you get more crazy up movement. So each time it does that, it's like you want to look out for fake outs, like kind of like that. Another way that you could have known that this was going to potentially just continue to buy up was you go look at the day chart. You go look at the day chart. And on the day chart, right, at that time, here's your high point. Liquidity has to be grabbed up there, and market was probably somewhere down here. So you're thinking, okay, maybe the market during its day trend, right? Its day uptrend might have some kind of candle that just goes down to potentially make a correction on the lower time frames or something like that. Because I used to think things like that, but we didn't get that. We got some explosive buyers to come in and sweep up this high. And technically speaking, it kind of in a way made its fifth wave because when I was mark this up. Here's your 2. All right, here's your 3 right here. Here's your 4, and then here's your 5. Now, of course, 5 could go higher due to, like I said, the U.S. dollar being the way it is now. But give or take, like that's just how I view the market. It's a lot of like you piecing a lot of things together to determine what you want to do. And it's crazy because even if you just did not know, okay, the market was going to continue to buy up. Well, check this out. So let me go back to the 5-minute chart. I'm gonna go back to the 5-minute chart, and I'm gonna see. Let me see here. So let me go. Where's it at? It was a big candle. Here it goes. It's right here. So imagine now this isn't a flat bottom candle, but this one is. So I could put a line there. You could have rolled some of that, and I mean you could have caught something. You could have caught something out of it. You know what I'm saying? Like you could have caught something out of that. It would work, and then from there maybe the top of here, something like that. It'll get you a little something out of that. Oops. I mean 51 pips, that's not bad. And then you could 51 pips for a 16 pip stop. That's pretty solid. And that's just this one little area. And then I mean you could, if you wanted to, you see how the market was kind of just in a little area for a minute, and then you get this again. So again, another flat bottom candle. Another one. Do the same thing. That candle, you could ride the second candle too. That would have got you 27 pips. Do like a 10 pip stop or something like that. Or actually, no. 2 pip stop. All right, I'm back. Yeah, I'm kind of. I don't know, like how um like some traders be doing it, but like